All right, flippers, welcome everyone. I'm just giving you a quick breakdown on Euro USD and GBP USD because on both of the pairs I just executed a trade in this London session. So starting with Euro USD on the 15-minute time frame, giving you a small context about the 15-minute time frame and what has happened here. So basically yesterday we were expecting trades on this supply, right? So we were expecting a trade after mitigation and confirmation of this supply, which has happened actually. It has happened yesterday New York session, and yesterday I traded London session, so I wouldn't been able to catch any of these shorts leading down to this point. But anyways, after this, in Asian session today, price just broke above the supply area and created a flip of the supply, leaving a demand behind. Basically, this was the demand that has flipped the supply, and price just reacted on it. And after this one, price just created another demand here on the 5-minute time frame. I just marked it out because it's more clear there. So price just created another demand that broke the structure to the upside, and there was a 5-minute demand above this one, which directly caused the break of structure to the upside. So let me just switch to the 5-minute time frame. Here are the demands that I just marked out. Here is the deeper one, that is the refinement of the 50-minute one, and here is the one that's above it, which directly caused the break of the structural high point. And basically, the reason I called these demands out is because we were in a bullish order flow. We just flipped the supply where I was expecting a reaction. Supply was flipped, so we had a freeway up to sweep out some more liquidity. On the other hand, price just swept out the previous low point here, swept out the previous demand also. And by sweeping out this demand and sweeping out the low point, it means that it collected all of the liquidity from it, because just imagine how many orders were sitting on this block. If you are a 5-minute time frame trader, any of the 5-minute time frame traders did set a limit order here. You can see the footprint that price collected all of this liquidity up, then it created liquidity and swept out all of this liquidity with this movement, then it immediately reversed to the upside and broke the structure. So that's why these demands were strong, because it grabbed the liquidity beforehand the structure breaking movement, and it makes it so much stronger. So basically the plan was pretty simple. I just sent you a markup that we are expecting a reaction here on this demand, a confirmation and longs, or we are expecting a confirmation on the deeper one, or if the deeper one breaks, we will be able to take shorts, and this will be our first target point here for our shorts. So these were the plans, simple plans for today. Nothing else. I just marked out these. All you have to do is to apply one of the entry models and enter in a trade with a change of character or a flip. Nothing else. So here is the actual trade that I took. Price mitigated this demand 10 minutes before the session opened, and after mitigation, it started to move up. So it started to move up, and I will answer a pretty simple question that I got in DM. That why didn't I open the first change of character entry, or why didn't I consider this as a change of character right here? Because basically this is a supply. So at the end of this recap, everything will be answered, okay? So basically, the demand has been mitigated 10 minutes before the session open. It just created a 50% mitigation and a perfect V-shaped rejection. Okay, but before this 50% mitigation on this demand and V-shaped rejection to the upside, something important has happened, and that was the trap. Because some of you guys couldn't understand this trap, that why was it counted as liquidity. If you don't understand this trap, first of all, look up to the educational pictures channel on Discord, or core pictures, and there's a picture about the traps, and it explains everything. This is actually the trap type 2, where price doesn't mitigate the demand, higher time frame zone, but changes character to the upside or to the downside, of course, in a short supply example. But in this long example, without mitigating the higher time frame zone, it changes character to the upside. Here was a change of character, and this is a structural point because price was coming down, coming up, coming down, leaving the structural high behind. So broke the high point, created a trap change of character, and it means that this low point will be a trap zone, because you can't open an order here because it will trap you, and you will be the liquidity for the zone mitigation. So this sweep has happened because price trapped all of the early buyers here who are impatient to wait for the demand mitigation, and they were trapped. Demand being mitigated, liquidity being swept out. So just imagine that everyone who just opened the position here, their liquidity, their orders being swept out here, and their orders have been reopened on this movement to the upside. So yeah, this is where actually, you just had to add your entry criteria. All you had to do is to look for an entry model. And, you know, here's a supply. This is the thing I want to explain again. Here's a supply, basically. This is a simple supply that causes a less recent breakout structure and a sweep to the downside. The reason I didn't really enter here on this movement, which basically broke about the supply with inefficient candle, is because it was outside of the session. For me, it was outside of the session. And by the session open, when the session open, this has been already mitigated. So this block was mitigated by this movement here. So it became invalid. It was before the session open. So I don't open trades before London opens, right? I do not open any trade before London session open. This candle, which actually broke the structural high point to the upside here, has been created 1 minute after the London Open, which means it's perfectly valid. It left inefficiency behind. Also, it just didn't create an inefficient candle. It left inefficiency behind because there was inefficiency in between the high and the third candle's bottom. And basically changed the character. Why is it here? I just wanted to place it here. Okay, so it basically changed the character to the upside on the structural high point. I just immediately did settle limit order on the 50% of this candle. I used the 2 pip stop loss, and I was targeting a 50-minute high point right here because it was 1-to-8 risk-reward ratio. I was targeting this high point, and it was perfectly enough for me. Basically, it went up. It was going pretty slowly, so this was pretty slow, but it was going consistently up. At this point, I just took partials at 4 risk-reward ratio because, you know, it was too slow for me. I just wanted to book something here because I was expecting a reversal to the downside because this was just way too slow, and it looked like that it doesn't really want to reach my TP. So I just booked partials, and it went up to almost TP, then it reversed to the downside and took me out in break even. So I just booked 4 risk-reward ratio, which is $2,500 on this trade in partials. Then the rest of the position did it break even, and that's it. Simple, really simple trade. Here was a higher time frame zone. Liquidity got swept into it. 50% being mitigated. V shape being created. Character being changed. Inefficiency was there. Nothing else needed, basically. So yeah, it was a pretty easy trade. Hope this video helps and answers all of your questions.